All right, so in the last video, I was talking about small and mid-cap companies that I've been looking through to try and find some nice ones. And again, I found one. There's another. I mean, there's a handful of them. And I just talking about ones that I haven't talked about before. Winnebago Industries, WGO, is another one that I found. And there's a handful of reasons that I'm getting a small position in this company. I'm not going to make it big by any means, but I think that this has a very good risk reward to it for many reasons. I mean, number one, if you look at the demographic trends, I mean, we have a lot of people, there's a lot of boomers out there, right? And again, they're either retired or very close to being retired, and a common thing for them to do is to buy a RV and drive around and go for a 6-month or a year holiday around the country or even the whole continent or you name it, right? And again, so I think that the demographic drives are going to benefit a company like this. And I mean, let's get right into the numbers here. I mean, first things first, a 10.7% free cash flow yield is very, very impressive. 10.9% earnings yield, again, that's very impressive, which I'll get into a little bit more later. The growth is struggling right now, but I think that that's a given their growth was very, very good in 2020, 2021. So again, I think that it will bounce back. And again, that's the kind of time when you want to be buying, is when things are going down, right? So profitability, again, they're okay. They're not great by any means. Management does a very good job, which is something I like. I mean, 14% return on invested capital is very good. 14% return on equity as well. Again, a price to free cash flow of 9.3. Again, 10-year average or 5-year average 10.8. A PE of 9. A 5-year average of 12.17. So they're below all of the traditional valuations, which again is why I'm starting to nibble a little bit at this one. If we get into the financials here. First things first, the balance sheet. Again, they have a pretty strong balance sheet, right? I mean, way more liabilities than assets, 69.5% versus 39.44%. So again, pretty good there. If we look at their metrics here, again, like if you look at these numbers, they're not crazy good numbers by any means, but they are fairly consistent. Like they don't have any years where they go negative. But I mean, the best year 2020, 11.4% operating cash flow. The worst year, 4.1% in 2018. So again, they're not crazy profitable by any means, but they're still okay, right? And the fact that they never went negative is good, because you're always going to see some form of growth. If we look at their free cash flow, again, 2022 is actually their highest year. 2020 their second highest, but again, they're still consistently going up over time here. They've been buying back shares. Basically, every 2020 they issued some shares. 2020 they issued quite a bit of debt. They have issued no debt over the last 3 years, which is good. They've been buying back shares consistently, buying back more shares, which is good to see. So again, that's another good thing. If we look at the dividend, again, this is another good thing about this company. One of the main reasons I'm buying. Look at the growth here. Again, current yield 1.88%, but they're going at 25% per year, which is just crazy, crazy good. And again, the payout ratio is only 17%. So they have room. They've got a lot of room to grow. A lot of room to grow. So the last thing I wanted to mention here is the valuation. Let's check that out, because I think this is always very important to look at here. So again, if we go back, let's say 2015, again, 19% free cash flow per share growth per year. Almost 17% operating cash flow per share growth. And the compounded annual growth rate of the price of free cash flow and the operating cash flow is actually going down over time, which is if anything good to see, right? So again, average price of free cash flow 14.3, the latest 9.8, the average price to operating cash flow the average 9.6, the current one 6.69. So by any metrics, this company, if anything, is undervalued right now. I mean, let's go back even like 3 years just to see out of curiosity here what that looks like. So again, they're still growing faster than the share price. Average price to free cash flow 10.3, the latest 9.8. So again, both numbers are still below. So again, this is a company that, as long as they stay below those numbers, I'm going to be slowly nibbling away. Again, not going to make it a crazy big position by any means, but I think this company has a lot of tailwinds, the odd headwind. I mean, the automotive industry in general is never going to be overly profitable, so I don't think you're going to see crazy good returns. But this is a company that 10 years from now, you easily could have a dividend yield of like 6-7%. 20 years from now, double that, right? Into the double digits, right? So that's another reason that I'm interested here. So anyway, again, I wanted to make a video or videos about some small and mid cap companies that I like. I haven't found one that I'm head over heels yet that I haven't talked about, but eventually I may find one, and I may start to talk a little bit more about some other ones as well. So anyway, that's what I wanted to talk about today. If you liked the video, hit that like and subscribe, and stay tuned for more.